Hey guys, we are back today. We are going to look at another company, one that I visit way too frequently, one of my favorite places to eat. Yes, it is Chipotle. We're going to see if we should buy, sell, or hold using a discounted cash flow analysis. So let's get into it.
Alrighty, let's jump into Chipotle here. So I've set up my Excel spreadsheet to basically align with how Chipotle has set theirs up. So just going to go to Chipotle's website and see the filings they've done over the last 5 years. So we will go ahead and do the trailing 12 months annual filings. And let's get into calendar year 2020. Pull this one up. Calendar year 2021. Pull that one up. 22. Whoops. 23. 24. And 24 is going to be the last year we're doing here just because 2025 is not complete. So we're just going to go off of the last full 5 years worth of data that we have. Okay, so jumping into the financial statements here, we have our years broken down: 2024, 23, 22, 21, and 2020. So the last 5 full years of data that we have. So I've broken down my sheet here by the revenues and expenses that Chipotle does. So food and beverage at the top, delivery service revenue. So those will make up our total revenues, and then total cost of revenue. That will be food and beverage and packaging, labor, occupancy, and other operating costs. And then getting into some of the operating expenses, we have general and administrative expenses. We do have depreciation and amortization here, but that's something that we'll do lower down here. So we'll skip that one for now. Pre-opening costs, impairment, closure, and asset disposals. And then getting into the operating income, we have income from operations, interest and other income, income before income taxes, and then benefit/provision for income taxes. So we've set ours up the same way. And then the last part of the income statement here, earnings per share and shares outstanding, we have those set up the same way. So just to save a bit of time as we're typing things in here, I've actually set up some automations just to make it go a bit quicker. There we go. Ooh, how nice is that? Perfect. So we got our revenues steadily climbing over time, and then getting into the 3 years that we're projecting out on this page. So you can see that's just coming from the revenue from the prior year, and then we're going to add 1 plus the percentage as the expenses as a percentage of sales. So that's how we're getting to those numbers, and you can just see those projections. So also, the costs, those are steadily rising as well, turning into the gross profit, which is, of course, revenues minus expenses. And then getting into the operating expenses, what these numbers look like, ultimately wanting to get to the operating income here. So the profit minus the total operating expenses. You can see that's steadily growing over time as well. And then finally, the net income, mostly growing over time. Big jump in 2021, a little bit of a drop in 23, but overall ending higher than we started pretty significantly there. Getting into the share price and number of shares outstanding, we can see that the earnings per share is pretty steadily increasing by a good amount over time. And then shares outstanding remaining mostly steady here. And those two will be a pretty big indicator on the next page of whether or not we're going to want to buy, sell, or hold. So we can take a closer look at that as we get onto the next tab. Alrighty, next we are moving on to the statement of cash flows. So we're going to look at depreciation and amortization, CapEx, receivables, inventory, accounts payable, and ultimately wanting to find the changes in working capital. So we have these pulled up here, different years. 20, 21, 22, 23, and 24. Again, we're going to go ahead and populate these with this little automation here. Oh yeah. All right, so we can see the changes here, and a big part is wanting to see the percentage of sales. So we can see dividing all of these by the total revenue just to get what those numbers will look like. So we can see the changes in working capital down here at the bottom. Again, we're going to be subtracting the prior year from the current year, except for the final one. This one's going to be reversed. So that will be the present year subtracting the previous year. So we can just see how those are trending over time, kind of fluctuating quite a bit. So we will see how that affects things on the discounted cash flow analysis. Alrighty, getting into the discounted cash flow analysis, we can take a look at some of these numbers here. Two of the big ones that we're going to be looking at are the terminal discount rate and terminal free cash flow growth rate up here. I think I mentioned before, but just kind of because of my lack of experience doing some really specific analyses on different companies, not too sure how we're exactly arriving at these, but I did look up and do some research. So selected these numbers 7 and 4 just because of where Chipotle is as a company, the industry that it's in, some of the past growth that it's seen. So don't really see them growing beyond 4% a year after some of these initial numbers. So that's kind of why I landed on 4%. And then the terminal discount rate of 7, just again, based on my research. So those are going to be some pretty key determining factors in what we're getting down below here. So you can basically just see, 2025, 26, and 27. That's what we had on the previous page. So just copied those over. That's just from the previous tab. And then as we're getting into farther out, 2028 through 35, you can see that basically this 4% growth rate is going to kick in. So that's what these revenues are indicating. That's what the revenue growth will look like over that time. It looks like these remaining revenue and expenses are hanging pretty steadily. Some are growing a little bit, some are decreasing, so just some minor fluctuations. But overall, you can see that our net income does appear to be growing over time, which is definitely good sign. As we get into the buy, sell, or hold position, that's going to be a pretty key number that we're looking at. And then, of course, as we're getting into the changes in working capital here, ultimately to determine our free cash flow, that's going to be another huge number. So this one we can see is also steadily increasing over time. Alrighty, and so as we're approaching the end here, we are going to be taking the net present value of these free cash flows as you've seen here, and then using the terminal discount rate. So that is of course going to give us this value here, along with the net present value of the terminal value, which is calculated over here, again, using these rates, which are pretty key. So essentially coming up with the projected equity value over this time that we're projecting. And so basically the last step is going to be to plug in these numbers here on the balance sheet. So we have our debt, which down here, I want to make sure it's in the right kind of scale here. So we have 920,437, which is coming from this 9 million down here. And then of course the cash right there. So similarly, want to make sure it is the right scale. So that's what we'll be looking at there. And the number of shares outstanding for Chipotle, we have typed this in here. So we're just going to go with this number down here that we found. So for this one, we're going to divide it by a few magnitudes, get that number of shares. And then finally, for our decision, Chipotle has a current price of $56.98, giving us an implied equity share value of $60 compared to the current price of 56 with a 6% upside, and that gives us a decision. Might be smart to buy Chipotle. What I really like about doing this analysis is it's a company that I go to very frequently, eat there a couple times a week. Not ashamed to say it, but it is one of my favorites. So They do say it's usually a good idea to buy stocks that is, something you shop at frequently, just kind of an indicator of how the company might be performing if a lot of people are going there and buying. So just seeing as it's giving us a buy signal, and it is a place that I like to go to pretty frequently, always a good sign. So maybe I could buy some Chipotle stock, make some money on it as I continually go there over time. How amazing.
Sweet. That one wraps up Chipotle, pun intended. Let me know what you think I should do next.